Yeah.
Also, my friends, I would like to inform you, everyone, we're live, baby. Welcome,
Amazing.
welcome, welcome. I'm going to let everyone get to streaming on in. Thank you, everybody, for coming to the stream today. This is absolutely huge, man. We got a bunch of absolute stars in the building, and I'm just like really, really excited to start talking to you folks. I'm going to start this thing off with just a brief summary of what we're going to go over. So we're bringing together some of the most innovative Avalanche DeFi projects to explore the ever evolving landscape of liquidity expansion, yield generation, and stable value assets on Avalanche DeFi. Our panel of speakers that we have are going to break down how their protocols benefit users, why they chose Avalanche, and how these innovations contribute to the network's growth in DeFi. I'm your host today. I'm Breevy, and today I'm joined with we have we have Rhett, we have the founder of Avant, we have JF, COO and head of BD of Avant. Avant's a protocol bringing AVUSD, a stable value token that's powered by Avalanche DeFi. We have Cengiz here, CEO of Dexalot, which is a cloud exchange L1 built using Avalanche tech. We have Lamehillbilly, founder of Pharaoh Exchange, an exchange with concentrated liquidity at the forefront. We're definitely going to dive into that. And we have Caesar, CEO of Stablejack, and Sextus, COO of Stablejack, a yield, volatility, and points market for any asset. Thanks for joining me today, my friends. I really, really appreciate you folks for popping on today. I think just to start everything off, let's go ahead and I'll ask this question to our panel of speakers here. What are some things that DeFi enthusiasts can actually do on chain, specifically on Avalanche? I'll just open this up to everybody.
Yeah, I think, I'll start with just saying, I think the majority of DeFi tools, like the baseline of what you'd expect to be on any kind of given DeFi chain, is already on AVAX baseline. I think something unique to AVAX is the community aspect and the uniqueness of what we've developed in all different avenues, including kind of our horizontal scaling with L1s, with Dexalot, and many others. We have a lot of brand new, like Avant, bringing something unique to the table, and even Stablejack. I think that's one of the core things that Avalanche is doing, is that we actually innovate rather than just looking to fill our chain with the same stuff that's on other chains. And so I think that's very unique to AVAX, and I've always enjoyed it.
Appreciate you for that, my friend. Also, I'm going to go ahead and, because you did mention Avant earlier, so I do want to go ahead and pick on them so they can talk a little bit about what they've built as well. Rhett.
you wouldn't be the first to get my name wrong. You're like, most people. I feel like my accent makes it so I can't even pronounce my name in a way people understand. But yeah, so let me say a couple of things. So I'll tell you a little bit about what we're doing, and then I can tell you also, to speak to your earlier question, some stuff that I think is worth trying out. So AVUSD, it's a yield bearing on-chain dollar. So to get AVUSD, you can obviously swap for it, but the more direct way to get it is take USDC and deposit it into Avant. The AVUSD is the USDC is exchanged for AVUSD. If you choose to stake that AVUSD, you get this token back called SAVUSD, or SAVUSD, some people call it. And that captures the yield that is generated by some on-chain yield generating strategies that are running in the background. So the USDC that comes into the protocol, we delegate out to some trading partners that put on a diversified mix of on-chain yield generating strategies. And then the majority of that yield passes back through to the user. Some people have seen some of these on-chain yield-bearing dollars before. So just to compare us to a few others, there's SDAI, or SUSDS, which is one of the oldest, from MakerDAO. Their yield comes from kind of a mix of RWA stuff, kind of treasury yield they're getting on all that USDC, as well as lending yield coming from the borrowers in MakerDAO. That's kind of where their yield comes from. And then they just kind of choose how much of that they give to savers. So that's one approach. Another approach is Athena, which has got a lot of attention lately. The way Athena works is assets that come into the system are put into what's called the carry trade. Carry trade, you hold an asset like Bitcoin, ETH, AVAX, maybe earn a little bit of yield on it through staking, and then you net out that exposure by opening up short perps positions. And so you get to dollar neutral, and especially in bull markets, it can be really high yielding. So that's the Athena approach. The Avant approach is kind of, we put things into a diversified basket. So what you'll see is a lot of the underlying strategies will be things like the Athena carry trade, but often more productive because we're using it in DeFi in ways where we can especially get better yield on the long side. And we can run that carry trade on various volatile assets like the ones I mentioned. And then in less bullish markets, the assets usually move into other types of trades, and that can be doing things on lending and borrowing platforms, things on yield trading platforms, like the really well-known one is Pendle, but to call out here, the Stablejack guys, they also, there's some really cool yield trading things you can already do on their V2, and there will be more coming. So we'll do things on those types of platforms, liquidity providing on decentralized exchanges, that kind of stuff as well. So that's where the yield comes from. We're kind of DeFi maxis. We love bringing TVL to good DeFi builders. We love, bringing that yield back to our users. So that's like kind of the basics of how AVUSD works. The yields have been really high. This is not like to make any promises about the future. For the last few weeks, our yield has kind of floated between roughly 3x the Athena yield. So Athena is doing 5 to 6%. We've been doing kind of more like 15 to 20 lately. So obviously that's not a promise of future returns, but just to give you a sense. For those in this ecosystem that are interested in doing other things, there's also some great liquidity pools with AVUSD against various assets. So if you want to do things other than just stake and chill, there's great DeFi stuff you can do, and there will be more of that coming soon. Let me briefly call out some other things that I think are worth looking into as far as DeFi users on chain. So there's some great places to loop LSTs. Benki, Aave, Folks is newer, and there's some good looping opportunities there for LSTs, where you borrow AVAX against your LST of choice. I'm a big fan of what the Stablejack guys are doing, where you can capture yield on AUSD, or you can get liquidation-free leverage on AVAX, which I think is really cool. That leverage side is probably something of interest to a lot of people right now, since we're kind of we've been in kind of bearish territory. And I love, yeah, go ahead.
Sorry, Rhett. Actually, since you mentioned Stablejack, I think it might be beneficial if we give folks just a quick overview of what they've built over there as well, if we can, and then we can kind of punt things back on over to the AVUSD side to bring it all together.
Yeah, sure. Let me give a brief introduction of what we are doing. We are building, as you said, like a yield, volatility, and points market for any asset. How does it benefit to users is that, first of all, we can allow fixed yield and leverage yield on top of stable coins and blue chip assets. We can allow leverage airdrop farming, and also we allow users to have leverage exposure to AVAX without liquidation risk. The protocol has launched 8 months ago, and it has been doing pretty well. We successfully achieved or completed many stress tests, so the product has been working as expected. And actually, we have been working with most of the protocols in this panel as well, and especially we are super excited for what is coming with Avant very soon. Basically, let me also introduce what is going to be. We will accept SAUSD as collateral and offer fixed yield and leverage yield on top of it. So if you do not want to have any kind of volatility in your yield returns, you can opt for the fixed yield. Or if you are bullish on the yields in the near future, you can just opt for the leverage yield exposure. And the good thing about is that we launched our version 2 last week, and with that we can actually build on top of any protocol on Avalanche. Like for example, if Dexalot creates new vaults similar to Hyperliquid, we can also offer leverage yield or fixed yield on top of those vaults. And if we can solve the LP management issue on Dexes, we can also utilize Pharaoh's the LP tokens as collateral, and again offer, like, let's say, token emissions, or like leverage token emissions or leverage yield exposure. So I believe this is going to be super interesting because, like, compared to other yield products, there is no impermanent loss, there is no uh, price slippage, or like no maturity date is required, and most importantly, all of the assets are principal protected. So we hope that, like, in the near future, we are gonna grow with everyone together here.
So I'm obviously seeing there's a lot of innovation happening in Avalanche DeFi, but there's also something that I've noticed specifically, just in you folks speaking on this panel, is there's a lot of projects that are working together. It seems like in this like big puzzle piece that's kind of getting put together, and I actually really think that that's beautiful to see that you folks are one, building on your own accord, but then figuring out how you can also work together to help expand the ecosystem as well. I actually want to pick on Cengiz here as well, because it's very, very interesting that there's all these different projects that are building on Avalanche. You specifically, you've built out an entire L1. Can you talk a little bit about the decision to build out that L1 and why specifically you chose Avalanche?
Sure. I mean, first, quickly, I would like to say what Dexalot is. Quick introduction. We are an omni-chain club DEX. Omni-chain meaning our home base is Avalanche L1, and our majority of the infrastructure and liquidity reside in our L1. But we have conduit contracts to C-chain, to Base, to Arbitrum, and many others, even to Solana in the future, where we can service aggregators from a single source of liquidity, right? At the same time, more sophisticated users can come to our L1 by depositing, do their trading, and then go to any chains that they came from or any other chains that they choose to. So this is the omni-chain part. And the club part is, for those who don't know, it's just simply the traditional trading methods where market participants can enter limit orders to an order book, the bids and asks, and they can constantly change their prices and quantities as market conditions change. Simple as that. It's very well-proven technique. Wall Street is built on this. Basically, Dexalot is kind of advanced trading view of Binance, but everything happens to be on chain. That's pretty much it, right? So when it comes to why Avalanche, for us and L1, Avalanche for us, from a Dexalot perspective specifically, solved two major problems. Gas control. Everybody's worried about gas, right? If you are a transaction-heavy application, gas is a big problem. So from early on, we have been live for 4 years, by the way, first on C-chain, and we have been on L1 for 2 years. That's our history. And from the day one, we knew that we were going to be in L1. We knew the Avalanche vision was to separate app-specific chains and provide interchain communication, right? So we put our, let's say, our first version on the C-chain, and then as soon as the L1s were available, we moved in there. So gas control, just to wrap it, gas control, we have our own gas token. As a result, we can adjust our gas prices, and we don't have to compete with any other projects for block space. That's a big, very, very important hurdle that we had to overcome. The second one, ICM. ICM is if you don't know, if you're not Avalanche person, ICM is an interchain communication protocol that is extremely fast, secure, and cheap. With those two, we currently support over 1 million transactions in a slow day. We can go to 2 million and so forth. And just want to mention that, and we can move tokens from C chain to RL1 or from RL1 to any other L1s. For example, we built a very specific cross-chain swap for Gunzilla. And when they launch, anybody will be able to buy their gun token with a single click using their USDC on the C chain and have their gun delivered in Gunzilla L1 within seconds. And this will be with the difference, other people can do that, but the difference will be zero slippage and it's going to be guaranteed delivery. What I mean by guaranteed delivery is if the transaction is accepted on the C chain, it is guaranteed that you're going to get your gun in the Gunzilla L1.
Excellent.
So, and if one day, this is not yet, but if one day, let's say the regulators, because we are a US entity after all, if the regulators one day say, hey, you have to KYC all of your blah, 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 and or you have to incorporate certain things into your application. Now, L1 gives us this very quickly. We can implement it and add this to our application without having to worry about any additional things. So Avalanche, why Avalanche? So any process-intensive application, DeFi or otherwise, or any application that need to safeguard, implement certain custom requirements, L1s are the way to go. And I mean, I truly believe the institutions and the current projects will come to this realization eventually, and we'll start using them. That's my also hope.
So you said something that I really want to highlight, because when we think about the landscape of Web3 right now, what is possible for the Dexalot L1 is like not necessarily possible for the rest of the Web3 industry. And what I mean specifically is the ability for me to go on the Dexalot L1, buy the gun token, and then it immediately is able to be available on the gun L1. I think that's
actually even better. From the C chain, you buy the gun token with your USDC, and we deliver your gun directly in L1, Gunzilla L1.
Oh, I see. Okay.
So you can come to Dexalot, buy Gunzilla from the order book. That's another flow. So we are supporting multiple flows. Whatever you decide, if you are just quickly simple swap type of guy, you want to quickly swap and go, that's fine. But if you want to buy gun token in bigger quantities, you come to our L1, just like you would go to a Binance. You look at the order book, you place limit orders, and you put your price. You want to get executed at the price and nothing worse. So these are all available for a user. So this both, it is like, I mean, I don't know how much detail I should get into, but this Gunzilla flow is specific to Gunzilla, and we expanded to other cross-chain swaps as well. But this was the requirement was that Gunzilla token wasn't going to be made available anywhere except in their L1. So that was a big requirement. So we worked around it and delivered this.
As a person who has spent countless hours just having to do research on how I get one asset from one chain over to another chain, I really love builders like you folks who are building something that is enabling it to be a lot easier for people to actually use Web3. Because I think
it is still not ideal for the normies, let's call them, but for
surely.
Yeah, it's going to be a maturity. It's a process, right? Eventually, hopefully, we're going to get there. And when we break that hurdle, it's going to be awesome. I mean,
yes, absolutely.
Normies coming to our space and really, experiencing the what we have to offer the very first time. It's going to be, I'm assuming that their mind is going to be blown. Where did we get that? But it has to be simple enough, right?
Yeah, for sure. I also want to go ahead and give Lamehillbilly a little space as well, so that he can talk a little bit about Pharaoh Exchange, the innovations that you folks are building over there. And then if you want to talk a little bit about, why you decided to build on Avalanche as well, I'd love to hear it.
Yeah, I'd love to. I wanted to shout out Matt, who was looking real distinguished with those glasses. I happened to notice when he hopped in, nobody got to say anything about it, but I wanted to make sure that was mentioned before we continued with the red shirt.
She's been on me recently because I stare at screens all day, and I have glasses, and they're blue light and prescription, and I never wear them because my eyes are like just good enough to not require them. And so she's been getting on me, and so doing it for to benefit her, I guess, make her happy.
Yeah, I'm in the same boat, man. I've got blue light glasses. I get yelled at all the time for not wearing them. 4 years in DeFi. I don't know. I might have to go see a doctor soon. Yes, specifically with Pharaoh, one of the things we do, we built what we call a meta dex, which we felt was, the best of all worlds of the dex scene, kind of combined into one product that aligns traders, LPers, and also this governance process of the holder of the tokens. And it kind of unifies them to have the same vision for the future of all these incentives, and they all make actions on chain that provide, the best experience for each other. And so when you align all these incentives together, Pharaoh provides this awesome experience that is able to provide the most holder revenue on chain, some of the highest yields that you can do through LPing. And then we also have, of course, concentrate liquidity engine that we have a competitive farming on top of, which means the tighter your range is, the more that we pay you in emissions. And so it oftentimes allowed us to, even in our early stages of Avalanche, right, we had over maybe like under 3 million TVL for a very long period of time before we kind of exploded into what it is today. But we were even then, stealing a lot of routes and doing, really good work in terms of trading and having low slippage trades for users that were on across AVAX. Shout out to Dexalot as well. They've grown substantially in that same time period. And I think they actually hold over 50% of all of AVAX's volume. So always cool to be on a space with them. They've done so well, and it's really cool to see that come out.
Yeah, we complement, our products complement each other.
I think so. A lot of people always say, like, how are you all going to fit in the same scene? And I feel like the type of traders that you all service and the type of traders that we service is just a little bit different. But altogether, I think, it allows the entire ecosystem to benefit. And so I always say that I love your all's product, and I don't think that we're competitors in that capacity. But it's been awesome building on AVAX. I think I've always been an AVAX maxi since the early days of Avalanche. Some people may look at it like a stain, but I think Tom Wonderland and Danny was a lot of people's intro and onboarding into Avalanche. And it was my experience, and the vision that you all had in the early stages, Avalanche, of building this horizontal scaling solution. To me, this app chains of interconnected, I think that was always drawing me to, like, a lot of people say never believe in the tech or nobody's in it for the tech, but I really am. I really think that Avalanche builds for the future of Web 2 conversion into Web 3. And I think that's exciting. And I think that's something that I can get behind. And I wanted to provide something on this chain that I felt like was a positive mark on it that could help, the DeFi side of it grow and expand on C-Chain, because ultimately I think C-Chain has to thrive for this horizontal scaling solution to really fit in and for people to onboard onto it and understand it. And so, that's kind of the part that I want to play with Pharaoh. And I think we're doing a really good job on that. Obviously, we've kind of exploded in metrics. Our holder revenue is for the actual Pharaoh position of governance process is the highest holder revenue. If you combine even the next, I think 5 or 6 protocols under us, we still beat it. And that's because we give so much of our fees, and based on how our ecosystem kind of works, we're able to just give so much of our revenue back to holders. And it's really cool, man. It's really awesome to see AVAX exploding right now, which I'd love to talk about. I think there's a lot of things that have been done right recently. I think the windups that Stablejack and Avant and them are doing, some of the things they're talking about, one of the broader strokes you can paint with that is that we needed these windups in AVAX DeFi. Those are absolutely essential, and to like really building a ton of momentum and shoveling it all down, and then it winds up really fast. And things like Pharaoh can supersize that as well with more liquidity, and all together that builds this huge effect, this huge explosion that we're kind of seeing right now, kind of built up with community tokens, but we're going to see it across all of Avalanche DeFi. And we're at like the cusp of hopefully an alt season. I don't know, people. I'm not a trader. I'm really shit at this. But if we were to be, in an alt season, I think we've really got an explosive combination of protocols that have laid the foundation for many years. And I think we're about to really be the highlight of all of DeFi very shortly.
It's kind of amazing how all of our different products work together. In traditional industries, you just don't see that, right? Like everyone is competing for sort of the same thing, but here we actually make each other better. And that's like not a sort of a fake platitude. It really is how this works. I think like a good example is just the way we think about like our product. Currently the yields have been sort of hovering around 20%, but as soon as we launch a lending market integration, without giving like strict guidance on what the number is going to be, I would expect you might be able to double your yield, potentially more. And then if we plug into a Staplejack V2 and have, let's say, a point program, then you can further juice that yield. So like, that's going to then allow us to play different games on DEXs. And just everything works together, which is, the beauty of the composable product, which is actually like finally sort of coming together where it's actually becoming usable for not just, nerdy DeFi people. I think we're getting to maybe like a sort of a UX that's acceptable for actual humans very soon. So yeah, excited.
It's funny you say that because like I've been around now the space for I guess 4 years. 4 or 5 years, and I'm someone that I never really minded a kind of crappy UX just because I can like figure my way through things, meaning like this is where I deposit liquidity, this is the strategies liquidity goes into, or like this is, I don't know, kind of the ranges I need my concentrated liquidity to be in, something along those lines. Like, but I always forget, for most people, they see like a seed phrase, for instance, and are like, oh, screw this. Like I can lose all my money if I just lose this like 12 or 16 word seed phrase. And so I think to your point about these products where you can sign up via email, and we saw a lot of them, I think, last cycle, but most of them are built kind of on Luna and UST and Anchor. I don't know if you guys remember those like signups where you could basically download an app, put your email in. I don't even know if you had to share your like social or anything like that, but then you could like pay with Apple Pay, and it was basically a savings account when it was just in reality built on top of Anchor. I think that style of UX, but like diversified into DeFi, is kind of what we need to get more of like the average person on chain. And I think what we're seeing right now is a lot of like wallets and Sexes are doing this, like with their yield products. But I think we probably have another step or two before the security gets good enough, it's fully non-custodial, et cetera, that people feel they're relatively safe, but also the UX is good enough and abstracted away, in which it really allows for kind of the next wave of adoption within DeFi. And at the end of the day, I think most of these strategies are too complex for retail to care about. They just want to park their money somewhere and get a higher yield than what they would get in TradFi within that. So
specifically on that point, then I mean, we have some great innovations up here right now where they can literally just do exactly that. I think we're going to see a lot of adoption from just like regular kind of everyday people are going to come in like the form of like, let's say like an AVUSD or something like that, where it's like, because I feel like these kind of products are products that kind of would make the most sense to them specifically, like kind of like normal everyday folks, because they want to put their money in something where like they come to it and it stays the same, where it goes up. And obviously no promise of that, but you know, you want to put them in a situation to where they can feel like they're more at home. They're used to their stuff being in a bank account that could, you know, okay, cool, mine's in a savings account that's making me a certain percentage every single year, and I'm perfectly fine with that. And I think applications specifically like Avant, like Stablejack, where it's like I can put, you know, they can put their money somewhere and it be just kind of held there. We're going to see a lot of people start to use that, I think, over time. I also, since we got you here, Matt, I want to pick on you a little bit because I know everyone out there, Matt, is Matt Schmenk. He does BD for over at Avalabs. You know, I know you're probably working with a bunch of different folks. Could you kind of give us a little alpha on like what you're kind of excited for coming up into the future?
Yeah, so there's 3 or 4 unannounced protocols that are launching relatively shortly within kind of the Avalanche DeFi ecosystem. And within that, I feel like we'll have kind of more well-rounded coverage within our ecosystem. There are a few like verticals or specific pain points in our DeFi ecosystem that I think are missing. And within that, I think that's when you really start to see the building blocks taking place and everything starting to like work together and build on top of each other. Meaning like Avant, for instance, they're doing, I think, everything on chain in terms of like the strategies, meaning like they're shorting perps, and that's done completely on chain via Perpetual's dexes. Avalanche right now is missing kind of a prominent perps dex. We have GMX, but I think unfortunately GMX has lost a decent bit of volume the past couple years. We had Hubble back in the day, but unfortunately they've kind of wound down as well. And so I think with that, we have kind of a market segment where Perpetual's player can come in and really fill that void. And it'll be very healthy for our ecosystem and allow for people like Avant and other kind of teams doing the cash and carry trade strategy to be able to do that hedging on chain. I've actually been thinking a lot because I think we probably are going to end up having 3 or 4, or even more than that, maybe 4 or 5 yield-bearing stablecoins, especially if they're staked. And so my brain starts to really like the gears are turning about as a user and someone that is just a retail participant. What would I want in terms of a product built using 4 or 5 different yield-bearing stablecoins? And with that, I think we could see something along the lines of like a balancer pool with those 4 or 5 different yield-bearing stables within them. And then eventually that LP position of that balancer pool being allowed to be borrowed against within like a DeFi protocol. Because then you're not only getting the yield on the stablecoins themselves, you're getting the swap yield, and then you can borrow against that and do other things within DeFi, or I don't know, gamble on meme coins or something along those lines. Whatever
Matt is so DG, dude. I love it. Matt is so DG. Look at how his brain works, dude. That's crazy.
I've been thinking a lot about it. But yeah, unfortunately, that's kind of where I came from, is kind of the on-chain trenches. My beginnings, I'd say I started within DeFi like 6 months prior to Avalanche Rush, but Avalanche Rush was actually how I became an Avalanche community member in 2021. And so started off using LFJ, which used to be known as Trader Joe, and Pangolin and Benki and whatnot, and been around ever since then. But yeah, Lamehillbilly, that's exactly how my brain works, unfortunately. I don't know if it's a good or a bad thing, but I think that's kind of why we're all involved within DeFi, is the composability within different dApps and really what makes those dApps successful in terms of working together.
So
you make the 4 pool great again, Matt.
Make the 4, maybe even a 5 pool. I don't know. I think Balancer allows for, is it 7 assets these days? I forget exactly how many, but their V3 allows for like dynamic weighting of those assets as well. And so you can even probably change the dynamic weighting based on like on-chain conditions, liquidity, that sort of thing, to ensure that the pool is kind of functioning properly. And if there's some sort of vol related event, reducing exposure to a certain like yield bearing stablecoin or something like that.
On that topic, by the way, quickly, Any other stablecoin people out there? I mean, Stablejack, they have a stablecoin, and we'll be doing some things with them. But any other stablecoin builders, we love to be friendly with others rather than competitive. So happy to build liquidity, collaborate, etc. Like I said, some things will be coming. Lots of things coming down the pipe with Stablejack and others here.
Cengiz, you mentioned Gunzilla a second ago, but also I noticed that you guys listed Wink yesterday, and that's kind of the quickest I've seen a new meme coin listed within Dexalot. Is that something that you guys are kind of shifting strategy for, is to be more supportive of kind of the newer coins within our ecosystem on Dexalot? Or can you fill us in a little bit about that listing?
Yeah. So the problem in a club Dex compared to AMM, maybe I can just mention a little bit on. Now, we have potentially better prices, right? Because we are club Dex, market makers can change their prices easily and quickly. So you can have the same price with a $50,000 TVL, whereas an AMM has to have maybe 1 million, right? But on the flip side, we have to have market makers, active market makers, who are actually watching the every other source of liquidity probably, and then reflecting the prices on our L1. So it is for a quality order book. And in an AMM, you can just open up a pool and leave it, and it is hassle-free. For a quality order book, you have to have a contracted market maker or a community market maker. So in this case, to answer your question, for Wink, we had a community market maker who was willing to do it very quickly, and as a result, we could list it. Otherwise, listing a token for us is very quick. I mean, it's like within an hour or so, we can list a token. So as long as we can secure a market maker, and on that, maybe I should just quickly mention that we're going to bring in vaults and community market makers more strategically. This way, we can list much more quicker and have the community market makers start market making on the new tokens very quickly. So that's our somewhat, it's not a different strategy. It's just that we are getting there now.
Follow-up question.
Yeah.
When are we adding Cat? Are we adding Cat there?
So again, we have to talk to our community market makers and say, hey, are you willing to do it? Like they have to put some capital behind it, operations, right? So that's the thing. Or we pay a contracted market maker shop that will do it on behalf of us. So. And
you said you are adding vaults eventually to make it easier. What's the timeline on that? Did you all have a date that you are planning to roll it out, or is it much later?
Definitely this year.
Okay.
We don't have a date yet. We are scrambling, the priorities back and forth. So anything can change. We can prioritize vaults ahead of everything else, but we have a delivery timeline that we are trying to stick to as well. So yeah, but yeah, vault is definitely very, very important for us.
I want to ask a little bit of a question for kind of everybody out there. What is needed to bring more users and more capital into our ecosystem? I'll pick on you first, Matt, and then we can open it up for everybody.
It's an interesting question. I think the challenging part right now is yields are where they're at in TradFi, and I guess they did get cut roughly 100 bips, but before that cut, they were at 15, 20-year high, and that's always a challenge in terms of kind of on-chain DeFi, especially before we really have sufficient tokenization of those RWAs. I think once you have enough tokenization of RWAs on chain, the risk-free rate kind of climbs up a couple points, meaning right now in TradFi, I think your stereotypical high yield savings accounts getting somewhere between 3.8 and 4%, and then short duration treasuries are getting like 4 to 4.25, and you can kind of go from there in terms of the fixed income curve. With that, we needed kind of the risk-free rate, which in my mind, it's always been like Aave, what you get on like stables and Aave, to come up as well as, I mean, more supported assets for those like short duration T-bills on chain, as well as money market funds in terms of borrowing and lending protocols and kind of other permissionless protocols, just to allow democratized access to that yield within kind of DeFi. And so I think we've seen kind of a slow rise of that risk-free rate the past, I don't know, year, and now it's generally on par or above that within crypto and on-chain. I mean, obviously, you have to factor in kind of smart contract risk and everything that comes with building an on-chain protocol, and with that, you have to basically give a certain amount of yield above the risk-free rate within TradFi for people to want to come on-chain. And so my brain kind of has that side as one piece of the puzzle, and then kind of on-chain abstraction, security, self-custody as the other piece of the puzzle. And we touched upon that closer to the beginning of this Twitter space, but I think most people just want to be able to sign up via an email, link their bank account, or use Apple Pay or kind of a different form of payment option to just very quickly bring funds on chain, and then not think about what they need to do on chain in terms of like the various strategies or diversification of different protocols, that sort of thing. And so I think both of those two things really need to happen in tandem. I guess the third, the first, in terms of what I chatted about, like a higher risk-free rate, that's probably the biggest thing to me. That was like what we saw in terms of the mass exodus from DeFi last cycle back to TradFi, is just kind of that correlation with, as the Fed is raising interest rates, more specifically the federal funds rate, more people would rather have their money in like a savings account that is FDIC insured, getting, I don't know, 3 or 4% of yield, rather than going on chain and having all that risk for something like a 5 to 10% return in terms of like stables. But yeah, I think there's a lot of kind of pieces of the puzzle to really make number go up in terms of TVL and various ecosystems.
Yeah, actually, like I would agree with what Matt said here. Like the yield is the most important part to drive the demand for the chain itself. And like I think like of course, like it's going to be a biased opinion, but like starting with Stablejack, I think Avalanche actually like is focusing on that front. Like it is Avant, like Pharaoh and Dexalot. This protocols also includes that thing. And also actually like right now we are working for principal protected structure products, where actually users are able to access above market yields with one click. And like the yield opportunities will be coming from not just Avalanche, but also like from other chains where the yield exists. But like for the normies, or like for people who don't know about the DeFi, like they will be just able to like use Stablejack and like access to like structured product depending on their risk profile with no like problem, and like with
Regarding
UX.
the principal protection, how are you doing that? Are you essentially tapping like an on-chain insurance provider, or what do you mean by that in terms of principal protection?
So like there are actually like a few alternatives of doing this, but like just let me give you an example. For example, like we are going to start soon accepting stake AUSD as collateral asset, and let's say the fixed yield on, like let's say the structured product actually is based on the yield token for the stake AUSD. So it's like it's going to earn something around 10 to 15% yearly. And what you can do with that actually is that you can harvest the yield for, let's say, like for each week or like for each 2 weeks. And for example, you can buy Bitcoin options. And like if Bitcoin performs well, like you can earn outsized market returns. But if it doesn't, like if it doesn't perform well, you still protect your principal, which is the USD. And like this sort of product, like depending on what you expect from the market and your risk curve,
there are interesting opportunities to get here. Also, like, we are based in Turkey, like, for those who don't know, and like we are talking with actual like Turkish banks, like they are tokenizing money market fund on Avalanche. What we are planning to do with them is that actually like using their money market fund as collateral asset to offer fixed USD yield and like leverage Turkish lira yield, which can actually like offer some sort of again like a structured product on top of USD. Like this sort of things actually like our focus right now after the V2, and like couldn't give you a like exact timeline for this, but like we expect to finish these products in like the near future and launch it soon actually.
So
I'd like to add very quickly. Sorry, go ahead, Jen. Yeah.
no, go ahead.
So just the institutional perspective a little bit, right? So Avalanche app-specific vision, the L1s, I think is right on point, and it has to be the next thing in crypto, everywhere, in blockchain world. But anyway, so I would like to see some more institutions to come into L1s. I am not really sure about how the big players will be receptive, like JP Morgan. If they are usually, they tend, I worked for JP for like 11 years. They tend to like building their own things, but I hope they soon realize that they can just spin off an L1 so quickly and start using it. But if not that, if we can attract enough mid-level players, institutions, we will achieve critical mass. And that will not be deniable. And Avalanche vision at that point will become the standard. So that's the only thing that I have to add in my mind to what's already been said.
How do we attract institutions specifically?
How do we attract institutions? That's a tough one. I mean,
I think the first thing, you don't make it illegal to be in DeFi, right? So I was going to add to like what Matt and everyone else said. Like, yield is going to be super important, but actually even above that is like, if I think I'm maybe going to go to jail if I start a DeFi protocol, I'm less likely to do that. I think a lot of really talented people didn't get into the industry for that reason, and then the big institutions don't want to touch it because they want to protect their core business. So to me, it's like, yeah, you need someone friendly in Washington because Washington drives the world and the US drives finance, really. It's the number one player. So that's number one. Then yields, and then just to bring people, if I can just sort of quickly segue to how do you bring people to Avalanche? I think for DeFi specifically, you need a strong DeFi stack on C-Chain. That's number one. And we've always had strong, I think this is like underappreciated, but our dexes have always been kind of amazing. So we had Dexalot from the very beginning, which is a cloud model. We have with Enclave Markets. I know that those guys are working on an FX model. Then we've always had AMMs from the very beginning, and those AMMs have been pretty like cool. I don't know if I should use the name. It actually escapes me. Anyways, the one that blew up. But even they had like an interesting, one-sided liquidity model initially. Then LFJ's done a bunch of different innovations through time. So I think we've always had really good dexes, but there's been other pieces missing. So I think, for example, something that does essentially the f of x or Pendle model that is able to take a yield and split into, and now we have Stablejack that's able to do both of those. I think having a strong delta neutral stablecoin that is essentially what Avant is, and I think we're like the most unique and actually best version of that model. So I think that's going to be super helpful. I think what we're missing now is borrow land markets that are easy to list on, which without giving away too much alpha. I mean, Folk Finance just launched, but there's, I think, also other entrants coming. So that's going to be pretty exciting, I think. Having maybe like a CDP would be nice. I think it would add to that. And then it was mentioned, I don't know if we mentioned it during the show. We mentioned it in the backstage before we began, but having a purse market on Avalanche would be really strong. So if we can have all these pieces on C-Chain, that's going to make C-Chain and just DeFi sort of very attractive. But then the real economic engine, to me at least, is just getting L1 season to work. So if we can bring a bunch of different L1s, DeFi and not DeFi, so anything that has utility and people are actually using, that's going to bring users, that's going to bring money in different forms. And then that's if all that connects. On the DeFi pod, we did a pod with Tesseract yesterday, and what they're building is like absolutely amazing. So like the cross-chain connectivity of all the L1s is going to be really, really incredible. I don't think people understand how smooth this is going to be. And if you haven't seen that, check out the Tesseract, like the Yildiak team's products that they're coming out with for swapping between chains. It's like buttery smooth. Like it's sort of like the dream of DeFi coming together, right? So yeah, if you can have amazing L1s and have all of that tech work well, and then you can have the full DeFi stack, I would be very bullish for DeFi and Avalanche.
Preview,
Yeah,
I also think you have to kind of separate this question into two parts, because like what Cengiz said in terms of bringing institutions on chain is very different than like bringing retail capital on chain or just smaller money. Like honestly, these days I loop in like crypto native institutions more similarly with like retail crypto natives, because those types of people like on-chain yield funds or token kind of yield funds in terms of those strategies, they're much more similar to all being like lumped in that like crypto native bucket rather than like more like TradFi / RWA tokenization bucket. Because to Chengiz's point, the bulge bracket banks of the world, large brokerages, etc., that's how you get like big money on chain, but that's still a couple years away. Right now, I think most people are still focused on like the crypto native institutions as well as retail individuals, and those are very different market segments, in my opinion.
Hey, just a question for you, Matt. When you say a couple years away, are you thinking like if you want to bring sort of like mass adoption of institutionals, that's a couple years away, or like
Yeah,
how long
meaning
does it
like
take before we
back
see like
office.
one big one that is like, hey, we want to be first movers? Like when does that happen?
My guess is a year to 2 years, that range. 2 to 4 years is when you're going to see this much more so into like actual back office efficiencies and tokenization and whatnot. Right now, we're seeing mostly like proof of concepts, MVPs, etc., being done on like a testnet environment. But I'm sure, as Cengiz knows, and Burke as well from like the Dexalot team, there's what was once known as Onyx from JP Morgan Chase. I think they rebranded about a year ago, but they're doing some interesting things, but it's kind of fully permissioned and not really thought of in terms of like your stereotypical like on blockchain like TVL, for instance. I don't know if there's like a place to look at kind of how many trades they're settling, what amount of money, etc. But in my opinion, and I'm someone that's always believed it's going to be mostly done in a permission setting, and that's why institutions are going to choose like building their own blockchains in the long term, and that's why Avalanche is set up perfectly for institutional adoption. And I'm someone personally that always subscribed to the vision and method of like horizontal scaling, and that's why I actually looked at Cosmos and what Avalanche very heavily before I joined Avalabs, just from like a tech perspective, because I always thought that'd be how most apps, protocols, companies, etc., choose to scale if they're using blockchains.
Just to call out a couple of early wins that we do already have. I would say PayPal is not a super crypto native company. They are pretty tech forward, and PYUSD there's like 600 million-ish. I know that they're using that internally to improve efficiencies, and then we all can use it as well. Definitely, we're like in the very small stages. So I agree with you that we haven't seen anything huge yet, but some early wins that I think we can build on.
Yeah, PayPal is an interesting one because unfortunately, I'm more interested by like what they're actually doing in terms of their own business efficiencies rather than what they essentially did in terms of like the Camino I don't know, looping strategies that were all kind of like subsidized on the back end via like Solana and the Sol Foundation, just because like that's just like your stereotypical, hey, we're going to launch a stable, we're going to throw incentives at it and get like DeFi adoption. And I think that's kind of what made that chart in terms of market cap look a little rough, where it like spiked up and then spiked down once the incentives wore off. And I think, to be completely honest, most crypto native individuals would kind of agree with me in terms of like the real adoption is more interesting than just playing like the same old games sometimes.
And also, like, I can add here that I think like institutional adoption will come first from the emerging markets like Turkey, MENA, or Southeast Asia, because like there is less regulatory scrutiny here. And as far as we see, like all the Turkish banks are some sort of have some testnet or like proof of concept things or just ideas. So this is something that we are like specifically looking for, because most of them are looking a way or how to integrate the blockchain technology to the space. Before just joining this call, I was watching the TV, and in the state channel, like they were talking about the blockchain technology, like just a small education type of things. So this is actually clearly showing how the things are growing or maturing here. So I think like basically emerging markets will be coming first, and then maybe the US market can come second, because these are like there are more opportunities here as far as I see.
Or Elon could surprise us. I don't know.
Yeah.
Let's hope.
Doge on AVAX.
Yeah.
I think one of the other things that wasn't touched on is like a lot of these were like, you know, the grand gestures, the broader strokes of what brings, you know, DeFi as a whole up, and also AVAX and what we can do to adopt that. But I think one of the smaller things, if we bring the scope down of like what can AVAX do to keep on-chain participants or onboard new on-chain participants from other chains, right? What do other EVMs do? You know, one of the things that if anybody's been on AVAX for a long amount of time, there was this almost like the community members had like a disdain for themselves or for what was happening in DeFi. And it was almost like we got to a stale nature. And I hated to see it, because I felt like we had the protocols, but we didn't, there was a collectiveness of people that just felt like they couldn't win here. And that was one of the things that I spoke about for a long time, that I think something will come that does that. And I think that we've seen recent communities and tokens and protocols launch. We have this strong foundation of new DeFi native apps that is already being built, you know, with Pharaoh and many of the other panels here. And even some of the longer standing, you know, what I would call blue chip AVAX protocols that have been here for the longest time. One of the things that we didn't have was like a breakout or these tokens that made people feel successful. And we see that kind of with Ket and Wink. And I think we're going to see it again with others. And these are really great onboarding tools, because regardless of what we LARP about on this stage, a lot of people onboard into crypto with a gambler's mentality rather than an investor's mentality. And I think that eventually gets converted over with straight fundamentals and teaching these people, you know, what these TradeFi tools do for them in a DeFi setting. And so I think we've done a really great job recently on AVAX of really rallying around different tokens and really supporting each other. And I think that is having longer lasting impacts that we haven't seen yet, that we're going to, of bringing in massive, you know, inflows of EVM chains that we're starting to see. You know, the inflows may not show it on a strict level right now, but I think overall the narrative is changing, where you can see a lot of people saying, wait, there's runners on AVAX again, right? And people are bridging over. You see a lot of people in KOLs talking about it on the timeline. And so on a practical sense of just like a shorter term scope of on-chain participants, I think what we're doing is working. I think, you know, the powers that be that push markets on AVAX, I think are doing big swings right now, just absolutely massive swings, and it's paying off really well. And I've you know, tweeted about it a lot, that this will be the most expensive part of the process, is reducing the baggage of the holders' mindsets that currently are on AVAX, and getting everybody into a winner's mentality, because then builders start coming in, they start building protocols that wind up on top of the base layer protocols we have here on this panel. And that's when the APRs and the windups get really nutty, and there seems like there's wins and explosions everywhere. There's excitement. There's fear. There's all kinds of other emotions that really drive people to a narrative, right? And that's really what we had been missing, that I think Ava Labs and many of the other participants on AVAX were looking for. And I think that they're finding it. And it's really exciting to watch because obviously, again, I'm a huge AVAX maxi, and I hated to see the struggle that we were in with the amazing tech. But everyone knows that narrative really drives. Token price is the first one, then it's narrative, and then somewhere at the very bottom is the tech. And that sucks, right? Like, I'm just saying it on like a practical sense. It's never really about the tech, other than for people like founders that really appreciate what people have been building. It's a narrative that drives people that either aren't on chain yet or that are on chain and looking for that. And so I think all of that is coming together really, really, really well on AVAX. And so it's exciting to watch it explode. We're going to see more builders and people that are going to be winding up protocols that are on this panel and saying like, oh, I want to use, AVUSD and build this, Ponzonomic, as we call it in DeFi, or different protocols that are just lashing onto other protocols and layers upon layers. It's really fun to be a part of if you haven't been. And I think it's coming to AVAX, and it's an exciting thing.
We really, really appreciate you, Lamehillbilly, for like that synopsis, because it's like I don't even know how to follow that up, my friend. Like, I think you laid everything out very, very beautifully. What I do want to do now is I'm gonna start closing this thing on down, my friends. I know, I'm sad too, but don't worry, my friends, don't worry. We will do more exciting things like this in the future. So don't worry, and make sure you stay tuned. I also want to, I'm gonna put this banner back up here really, really quick. Bam, I'm going to put that down at the bottom here. Man, so we have some amazing people as well as amazing projects that are building on Avalanche. And here's some of them right here up here. And you got to hear a little bit about, overviews of what they're building. You got to hear a little bit about what they're thinking of as far as building into the future, as well as their mindset on like how Avalanche DeFi can expand in general. I implore everybody who is watching this currently right now, or who has watched this, please make sure you follow all of our lovely, lovely panel of speakers up here. I put all their different DeFi projects down there at the bottom. So please make sure you go ahead and follow them. And I'm going to give you a quick pro tip before we get on up out of here as well. And that is to make sure you put on bell notifications, my friend. Now, you're watching a stream on Avalanche. Avalanche is the builder's chain. That means we be building stuff. So you want to make sure that you have the bell notifications on, so that anytime that they update about what they're building, all these different innovations that are going to go ahead and bring adoption to the masses, you want to make sure that you are in the know about all these different things. So please make sure you go ahead and hit that bell notification so you get notified every time they post. Make sure you follow AVAX, Pharaoh Exchange, Stablejack, Dexalot, and Avant Protocol. Again, to my audience out there, appreciate y'all so much for joining us. And to my lovely panel of speakers, I really appreciate you folks so much for being willing to join us on this stream. I'm going to go ahead and end this in my usual way. JF is starting to smile already because he knows that way. And that way is this: you don't have to go home, but you got to get up on out of here, y'all. Peace.